All right, welcome back everybody. We're going to do our usual daily recap of the NFP day, 3rd of September on gold, Bitcoin, and EuroDollar as usual. We're going to start by looking at the events, the reports that we had today, Friday, September 3rd. We had on the Eurozone in the morning the retail sales, which came up pretty bad. And we had, of course, the NFP, the labor force participation, average hourly earning, and I have this one, so I don't understand why I'm not using it. For the Eurozone, NFP, average hourly earnings, labor force participation, unemployment rate, and then also the ISM PMI to the end of the day. You can already see the number. We're going to see them in details afterwards. So starting the day on gold, what we were looking for as talking about it from the last few days, we were in a higher time frame range, as you can see, between two price points, 1820, and the lows around 1807 price sensitivity area, respected many times with no intraday closures during the any hourly candle. We were expecting, of course, during the morning some ranging, some slow movements, waiting for the big movement that happened at 8:30 a.m. Eastern. Let's jump on the 1 minute chart as usual. As you can see, chugging in from pre-London and London open above 1812 key level, no clear price action, no movement, no much volume in gold in the chart by investors. Of course, as always happens, investors are just on the sidelines waiting for this big announcement that always comes for with the NFP, especially now that it's so important for the tapering and interest rate talks from the Federal Reserve. Okay, as you can see, we're coming into pre-New York time with a break above and retest above this previous high, nothing special, just some bullish impulsive, just a little bit above the key level, but nothing to enter yet. New York open gives nice push up, creates a sort of top wick of the hourly candle, retraces down, waiting for the 2:30 / 8 a.m. Eastern data. So let's say we have a reaction at 1817 positivity area, retest of the almost 1812, and then the data release here in this candle. So as we can see, if we zoom in, there we go, we have, okay, very bad non-farm payroll. So new jobs created were far less, 200,000 instead of the expected, already lower, 750,000 compared to the revised 1,050,000 jobs created the prior month. So as you can see, it's a very, very, very worse than expected, worse than prior report. Average hourly earnings better than prior, better than expected. Unemployment was good as expected, slightly better than previous. PMI slightly worse. ISM later on slightly better, but this report made the difference. as you can see here. So we had very sort of untradeable but still very clear fundamental bias of buys on gold, and with a move of around 140 pips, I might say. Yeah, under 50 pips in 2 minutes. 1 to 3 minutes, sorry. A huge rejection at the key level 1828, still high spreads, still high, still untradeable. You see a bounce. I don't like it here. Actually, let me do one thing. Okay, since this part is all useless, I will just fix it. Just give me a second. Okay. There you go. So from pre-London, pre-New York, we were flat. We were just moving around the key level, slightly above, nothing really special, small candles, waiting for New York open, and then liquidity grab on the downside, and then the very aggressive spike up due to the very bad news, very bad report for the US dollar. Then you have, let's just put however, very strong rejection, slightly dipping below 1820, creating a softer double bottom if you want to see it. With the first one and the second one. So let's go step by step here. NFP versus 1 million previous, which is very bullish, of course. Rejection 1828. Double bottom at 1820. Still very messy, still very not clearly tradable, in my opinion. I didn't trade it during this. Usually you want to trade when as you say, the dust is settled. So okay, let's see, the investors have done their move, their quick move. Now we are going to see our real move, real sentiment taking place. You can enter here the double bottom, and you have still a nice, really nice scalp. We're going to see our actual best entry. Where would that be? After New York Stock Exchange opening, we see price creating a lower wick on the new hourly candle. And what you spot here is a really nice retest of the key level. Second, let me put it smaller. Second bullish candle making lower wick and slowly flipping bullish. This for me was the entry. if I have chosen I have to choose an entry, it was here, was really perfect and give you really nice scalp if you hold it all the way up. Giving you more than 100 pips. Very safely, much safer than this initial move, because here the spread depends on the broker, but my spread was like 1 pip. So very, very, very tradable. And so giving you a risk reward entry. Let's see, because I'm seeing something here. You also had a retest of this level with a medium risk entry and the safer entry with a clear, slow, nice break and retest of 1828, failing to break below, giving you sort of 50 pips as another scalp. Then you see price is still reacting at the same level, giving you 20 pips, bouncing and bouncing and bouncing. This is it for gold. Okay, so this is it for gold, and we're going now to similar action that happened on Bitcoin, and then we're going to do EuroDollar, very, very similar. All three are against the US dollar, even if looks like that Bitcoin is a crypto, is on its own. It will just react since it's been so much institutionally traded, and since we don't know who owns the most Bitcoins. Okay, it did very, very similar action to gold, as you can see on the morning. Around here, we saw price creating a high, reacting at 50,000, making a new low, but failing to break below this price sensitivity area, rejecting at 48,500 ppl, bouncing off, break, retest on the higher time frame of the price sensitivity area already charted, and then continuation up. As you can see, these are the candles of doing New York session. As you can see here, you can zoom in the same. We're going to see what happened. So as you can see on Bitcoin, we had some slow movement, some reactions at the PPL, finally breaking above and giving you some quick scalp above the PPL, reacting again at the next one, but still breaking above and making new high. From there, we see a sort of triple bottom above the PPL, with failing to break the same highs, and then ranging, failing to break the previous lows, bouncing, reacting at the PPL, reacting in the previous highs, creating an inter lower time frame bullish trend. With, as you can see, you can identify higher lows, and then slowly above the key level, the PPL, and give you, let me put it in green, because now you're identifying a market structure of bullish. Even if it's low, it's still bullish, We are still in pre-New York. We have risk reward entry here above the PPL. You see the reaction at the next PPL on the dot, exactly on the dot. Price creating a double top and failing to break. You see a break, retest below, retest of the PPL, and then continuation down exactly to revisit the following PPL slash, if you don't have charted the PPLs, you have the price sensitivity area on the left hand side being respected if you want to use it that way. Let me just put it better to follow the price action. Okay, there you go, giving you, of course, risk reward entry, safer entry below PPL. From there, what you see is still strong reaction, price still making higher lows, reacting at the previous highs, breaking above. You see this red candle reacting exactly at these most recent highs here on the left hand side. Let me make it just one line, giving you safer. Here is a risk reward because we are below the key level, but then you see that we break above. We retest the price sensitivity area on the left hand side. If you see it here, yellow please. Okay. To then go and revisit the PSA on the left, not even the PPL. You have a reaction, retest exactly on the dot of the PPL that was broken before, and then exactly at 2:30 a.m. you have the big spike up, exactly as it happened on gold. It happened also on Bitcoin, signaling how Bitcoin is still is very, very dependent on the US dollar, being controlled by big investors, not just hodlers. And from there you see price multiple reactions at this PPL, as you can see, and then slowly moving below with not much volume anymore. You can identify a bearish trend after you see failure to break 51k, failure. You can either chart it in red. Let me do this to be coherent. Let's see, big reaction, exactly reacting after 2 minutes, reacting exactly at this at the PPL recharted. Not a very clean price action, but still indeed making new lows, creating a wedge against the PPL. And finally break retest for quick scalp below. So this one was risk reward entry, and here save entry. Okay, so this is it. This was Bitcoin. As you can see, slow pre-New York. You can have a scalp during London session because it reacted from PPL to PPL. Slowly charging away and going to revisit the next PPL, which will be respected again later, as you can see. Okay, reaction at this PPL. There you go. And then, of course, the okay. And this is it for Bitcoin. And we're going to do quickly the same on EuroDollar, which of course had the same moves, only quick scalp. And we're going to see from pre-New York during London session was due to the retail sales. As you can see here, the very bad retail sales compared to prior and to the expected, which here were at 10 and 11. So around here you can see the rejection from PSA to PSA. Let's jump into it. Exactly. Okay, exactly here. So usual, possibly yellow. Nothing really special. Reaction, first reaction at PSA, already charted up. Failure to make new highs. Reaction almost to the next PSA. At 10 we had slightly worse data, but we were waiting for the 11 a.m. Report on the retail sales, which was essentially priced in because investors already around 10:30 digested the PMI, worse PMI, and were expecting a worse than prior retail sales, which was confirmed, giving you very, very strong, very, very fast sells to the next and following PSA. But as you can see, let me just say here, worse retail sales and PMI. Am I right? PMI. But as well, we were expecting and waiting for, we were more than expecting, we were waiting for the NFP as well, being against the US dollar, as you can see, just bouncing above the PSA till New York open, then just creating wider a wider order block, but not breaking anything yet, until here you have the news release and the report release, the figures of the bad NFP numbers, giving you, I think it was around 40 pips total, exactly 40 pips. FP way was expected. And as happened on gold, almost equally, even worse, correction immediately after. This whipsaw that happened, let me write it down. Whipsaw due to way worse NFP numbers, better unemployment. Let me put it this way. Green this one, and in red as bearish, better unemployment, better average earning, nothing else. Labor participation, okay. Okay. Let's go back on the price action. Here you see another bullish move after retesting exactly on the dot. Also, you have a retest on the dot of the PSA. Continuation up, break and retest of the PSA, and then trying to make new highs, failing to do that. Nonetheless, giving you high risk reward entry. Why I say you that this is only the bullish entries are good, not this one, because the main bias was bullish because of the way was shockingly worse data. If it was similar, slightly worse, was not that impacting for sure, especially with good numbers for the unemployment and earnings and labor force participation. There you go. Then you just start to range between the price sensitivity area until yes, you have a break, retest, and then very slow. You can see how slow it is, but it's still indeed making its way up for like 14 pips. and then equally slowly mirroring the move, head and shoulder, whatever you want to call it, go back to the PSA. And this was Euro USD. Very simple, very similar to the other pairs. So this is it for this week. This was very short. All three pairs reacted at the same fundamental catalyst that I already showed you. See you guys next week, next time, this weekend. We will see.